The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first chart we're going to look at, as usual, is the DAX index. As you can see, we were down there at some pretty good expansion numbers. And of course, sometime around 5 o'clock this morning, 8 o'clock New York time, the news came out about the CFIUS ruling, whatever that's going to be. And of course, the markets rallied quite a bit. I'll cover that in just a little bit, but the one I wanted to mention before that is if you look at the two charts between the DAX and the FTSE was the much better buy, and the reason for that is you had many numbers coming together down there at 74.50, whereas with the DAX you had two numbers. This one you had four numbers. You had double ABCDs, 1.618, 1.27. I mean, it was just everything. Two double ABCDs. So that was, to me, the easier one. Of course, it's had a very substantial rally this morning also. Oh, by the way, our guest today will be Bill Meridian of Cycles Research. Tomorrow we'll have Dennis Gartman of the Gartman Letter. Friday, we're going to have Stan Harley of the Harley Stock Market Cycles. And next week, we're going to hopefully have Melissa Moore from More Research out of Oregon. That is Steve's daughter, but she's going to be doing it. All right, I want to talk just a little bit this morning, since we've got the time here, about what happened last night. This is the way I'll do this. I guess I'll just show you the E-mini, because this is the one that we were watching last night. You'll notice that yesterday we made a 382 retracement, and we were expecting the market to make an ABCD pattern up there around 2742, but that was negated when we started to come down. And what we did last night, for those of you that follow it through the night, right around that 5:30 time frame, we were trading at 2707. And the low had been 2705.50. That was a 78% retracement of the move back. And now what that does, it sets up an ABCD structure at 2742. And I don't think we're going to get much higher than that, but that's just my 2 cents worth. That's really all we're looking at. Now, if we take a look at the NASDAQ yesterday, we were doing pretty much the same thing. You'll notice that, again, we came right at the 382 retracement of the high. Last night, we got down to 70.20, which was a 78% retracement of that move, which sort of makes it, you'll be able to see it here in just a second. I'll get it up here, 1 second here, and you'll be able to see the NASDAQ. And there's where it was. You can see what happened when that news came out. You know, we went 80 handles, basically straight up. That sets up an ABCD structure that would take you up to 71.70, it looks like. That's another 60 points higher. When these markets are very prone to news and emotionalism, I don't know if it's related to what's going on. Of course, we have the full moon. That should have some, application to this, because that's when the crazies come out. At least that's what the old astrologers say. But we are having some pretty good volatility based on some of this news, and the markets are very, very jumpy, and that's not unusual. They've been going straight up, since November of 2016, and yesterday was the first time the Dow Jones Industrial Average had closed below the 200-day moving average. I don't particularly use that, but that's something that a lot of people look at it as far as trend, and of course we went below it, and then now we will snap back above it. So if you look at a 200-day moving average on the chart, it's pretty hard to get a buy signal, because it jumps around that number quite a bit. You'd have to risk a great deal, to trade around that. Since we're talking about the full moon here a little bit, there's one market that is really oversold. I mean, really oversold. It's due for a rally, and that is the gold market. Let's just take a look at this gold on a 30-minute chart. Folks, in the last 2 weeks, we have not had a rally that exceeded $9. I mean, it's just been one-way Corrigan all the way down. But on this particular chart, you'll see that today's high was a 78% retracement of yesterday's high, and that came in at 1262. That sets up a potential 3 drive to a bottom pattern down at 1252. So with the full moon coming in and the fact that it's very oversold, that would offer a very low risk buying opportunity in gold, in my opinion, because you have a really nice 3 drive pattern there. You're right at a 1.27 expansion. You might or might not have something happen with the full moon. And folks, believe me, I don't know anything about how that stuff works, other than I see it work sometimes, I see it work not sometimes. So all I'm doing is trying to control the risk. But at 1252, I would be willing to buy the gold there. I wouldn't risk more than about $4, but it's time for gold to have somewhere between an 11 and $17 rally, and that's all it's going to be. To me, the gold is heading to 1206. I think that's the 61% retracement of the December low of last year. Once we broke that level of 1285, if you'll recall last week, that basically said that, you know, this doesn't have any legs. I really thought it had a chance on Monday, as I mentioned before, because the platinum had made a new low with a big ABCD format, but that was short-lived also. So it appears to me that the gold is still heading, you know, towards that 1220 to 1206 level in the spot gold. So that's what it looks like in the gold market. But for short term, you know, that's one that doesn't look too bad in my opinion. There's another one that's also interesting today, and that is the Treasury bonds. I wanted to bring this up to let you see, because we are, you know, long term, we're very, very bearish bonds. This is nothing more than a big rally that we've been having that started back on the 18th of June. We had that big monster move, then we had the pull back to the 58% level, and at 145, we are setting right at the 78% level of that move. So it's going to be interesting to see if it's going to be looking at. You're right, Mr. Z. Copper is very interesting. I'll cover that next. I'm glad you brought that up. But I think what I'll do on the copper is hold off so we can discuss it a little bit more when we come up, because we got a break coming here in a few seconds, and I don't want to start it. So we'll see what's going to see how that's going to happen. I also wanted to go over the euro, because I've had several questions. Thank you, Mr. Z, about the euro. People ask me, do I think these markets are manipulated? No, I do not. I will go to my grave thinking that that's not going to happen. Because if you just look at these numbers, these numbers can't come up all the time. I mean, they don't hit all the time, but they have a really high probability of hitting a lot of the time. And you can't hit those numbers exactly with the market being manipulated unless the people doing the manipulating are familiar with the numbers, and that's very unusual if that's the case. But you see it over and over again. So and if you looked at the euro, which is the LIBOR rates, that's just baloney stuff, Bill. That's just a few guys playing games over there, and they can do it short term, that's for sure. Take a break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we have a question from Danny in Atlanta about the plunge protection team that was started in 1987. Basically, they did stop the market from going down then. That was October the 19th. And October 20th, what they did, Danny, was they changed the accounting for banks. In other words, they were able to mark their inventories to market instead of to cost. In other words, if they were long Bank of America at 36 and the price of that day was 16, they could put it on their books as 16, and that gave them margin for using the work. The other thing that they did is they had the Federal Reserve open the vaults so that any of the big banks or brokerage firms were given all the money that they needed to start buying, and that's what brought in the buying. That'll happen at times, but remember, that was 31 years ago, and you don't want to base your career on trying to pick a crash 31 years. That's just not very good thinking. But I don't believe the markets are manipulated. I just see these Fibonacci numbers and patterns too often to think that they are. But I'll go into the euro just a little bit. But let's talk about the copper here, because Mr. Z had a question in it. The copper is very interesting. As you can see, we had that big double top up there at the 332 level. We actually hit the exact high from December to the tick. It was a 1.618 expansion, and then we came down and we broke below 303. That was a 78% level, and that was the last support for copper. And I believe that if we get a rally, the most rally we're going to get would be probably a 38% rally that might take it up, to maybe even a dime higher at 307. But that's what it looks like. We've had an outside day today. That's where you've had a higher high than yesterday and a lower low. And you need it to get above $3 for it to be a positive upside day. I don't know where it's trading right now, but that's what you would have to have in order for the copper, to be a pretty good reversal. But it's broken all support at that 303 level, in my opinion, and I don't see there. If you want to buy something, find something easier would be what I would be thinking about. Now, we have another one that is spot on here. I hope I haven't done this yet. Let's just get this. I don't think I have, and that is the Treasury bonds. Let's get this up here. Here's the Treasury bonds. I hope I haven't done this yet. Yeah, okay, 298. We needed to get above $3 in that copper. Then it's got a chance for some more rally, but it's surely got to get moving. If we look at the Treasury bonds, you'll notice that we're making a 78% retracement now at that 145 level. So far today, the high has been 145.02. Whether that's going to be it or not, I'm not really sure. But let's move on to talk just a little bit about the euro, because that's one of my favorite things. I'll try to do platinum, Ruby, but I hope I can, because I think I will be able to. But we have Bill Meridian coming up. I've got to get prepared for that, and I want to be able to make sure I do that correctly. But let's take a quick look here at the euro. This was one that we sent out yesterday when we were up at that right up at the 61% retracement level, just spot on at 117.05. We're now down. We're almost, you'll notice here, this was sent out a few hours ago, maybe about 4 hours ago, that we're almost down to the exact 61% retracement now of that move, which is 115.90, and that should hold it. And if it doesn't, then we're going to be looking at a big ABCD structure that could take this thing down to 113, without any trouble at all. So it's going to be interesting if we can hold the 115.90. That'll be one that is we'll be watching very, very close. We actually got within 4 pips of the exact 61% retracement level in that. So we'll move on here to the next one. Let me get this platinum up for Ruby so she can rest easy. PL is platinum is PL. Let's get it up here. And here we are. Well, platinum's not looking very good, Ruby. I was thinking it was going to hold that 858 level, but it's not. And I'm beginning to think that we're heading to 12. Maybe we'll go over. We'll just 1 second, please. Maybe we'll go even below $1,200 in gold. I don't know. But look at platinum. This has broken the 3 drive pattern that was there, and we rallied $32 in platinum over 2 days, and then it gives it all back in 1 day or 2 days. That's not very bullish. So that's why I'm watching it now. Someone asked a question, why am I looking to buy gold? Well, that's a 30-minute chart, and it's because of the possibility of the full moon coming in there, and that's really what I'm looking at. I'm just trying to find a pattern that looks really interesting, and that gold one does look interesting at 1252. Whether it gets there or not, I don't know. The fact that it hasn't gotten below 1256, given the fact that they're whacking platinum pretty hard, really makes you wonder. The question on crude oil, folks, once we went above 70.23 yesterday, that put a bullish bias in on the crude oil. That exceeded the 78% level of the last move. We're not too far away. We're only a buck or so away from the old high at 72 and change. And remember, we dropped well over. We went from 72 down to 64, so we dropped 8 points. And now we're taking it all back. So this is telling us that this thing has certainly got legs. Maybe it'll be a double top up there at that 72.80 level, but there's no other pattern that I can see that would tell you that this is, this is really moving. You don't want to stand in front of it. That's the main thing. It's the same reasoning like, the other day in the NASDAQ when we were at that 71.40 level. Once we went below that, there was basically nothing there, and that's pretty much what happened. It just melts down. When these numbers fail, they usually go on to the next set of numbers. Why that is, I'm not sure. I just can't give you enough information about it that I know of, that just when they fail, they go on to the next set of numbers. And some people trade failures. That's what they like to do. And if it works for them, that's it. Here's the one that we got to pay close attention to, folks. This is Deutsche Bank. This stock is now trading. I just checked a little while ago. It's at 10.33, down again. And remember this, folks, look back in January when Deutsche Bank offers a 35% discount when the stock is 21. That means you could bought it for 17, and now it's at 10. That's not a good deal. So when it looks like it's too good to be true, chances are it is. Remember that. That's from Bernard Baruch in his autobiography, My Own Story. this stock is heading towards 4 or 5. Now, it's the flagship of Germany. There's no way they're going to let this bank go under. That is not going to happen. Well, there I go again, making a statement that I'm not sure of. But the chances are that it's not going to happen. And the reason why is they have a lot of pride there, and it's all backed up. They would have to come in and make these trades good. The problem is Deutsche Bank is the leading bank for counterparty risks and all these trades. And so if they had some really big problems in there, that would be it. The way the stock is acting, they haven't corrected the problems. And maybe they're worse than we know. But all I know is this stock does not look very good. It hasn't looked very good for a long time. So that's it. All right. Stay tuned for Bill Meridian of Cycles Research, and we'll be back in just a few minutes.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, and I believe we have Bill Meridian of Cycles Research, Vienna, Austria, on the line. Bill, are you there?
Hi, Larry. Good morning.
Good morning to you, my friend. We're going to talk a little bit about gold starting off today.
Yeah, well, I have, what page? Are we on page 2? I have a summary here.
Page 2, yes, Yeah,
well, gold, I think, is in a trading range. Now, you wanted me on last week, so bonds likely to rally from Tuesday was from last week. No, it's from this week, yeah. Okay. And stocks are always pending, the oil cycle, and then there's a plug for my book, which we'll see at the end of the presentation.
That's a great book. That's a really great book. I don't know how you can do all that. Honest to God,
Well,
it's really an incredible book. Yeah, I know, but boy, it takes a lot of work to do it. My hat's off to you, buddy.
Okay, well, if we go to the next page, these are the links if you want to read these. The articles I have up on Forbes are a bit more complete. One is about gold and one is about oil at Great Speculations. And so if we go to, now we're on page 4.
Okay. Well, this is the gold cycle.
That's the gold annual cycle.
Mm-hmm.
That is the histogram of gold from 1969 to the present. In other words, it is the expected return. And we'll see the numbers, I think, on the next page, but it is the probability times the change. So as we can see, March is the weakest month, October is a weak month, June is slightly negative. And right now we're in this period, July, August, September, where the histograms are getting higher and higher. In other words, this is one of the most bullish stretches for gold on an annual level if you average the last 40 years together. I still think gold's in a bear market, but let's go to the next page and we'll get the details.
Okay.
So here are the details generated from data from 68. In July, gold has risen 54% of the time for an average of 0.385% gain. That is the blue bar you saw on the previous page. August, gold has risen 59% of the time for an average 0.810% gain. September is the strongest month, rising 60% of the time for an average 1.88% increase. Now, this is how I got started a long time ago. And as everybody out there knows, you get the days from a calendar. You get the calendar from the relative position of the Earth and the Sun. And that got me into looking at other planets. Besides, if you're going to look at a seasonal cycle, why don't you look at the seasons of Mars, Venus, and all the other planets? And the next step in the procedure, if we go to the next page, this is a sine wave analysis that extracts all of the let me get rid of that sound in the background. It extracts all of the data and just determines which cycles are powerful. It runs it through some statistical tests to filter it a little better. But then I added a buy and sell signal test. So what you're looking at, the red lines and the green lines are the ideal buy and sell points based upon the trading for the trailing 12 months. So this is a supplement to what we just saw. So now if you look at it, it bottoms around now, and it rises to the middle of July. So July is a positive month, but not strongly so, and the cycle points up. So you have a reasonable chance of a run up to mid-July. But if you look later on at the next green line, near where it says July 29, at the bottom axis, that August is a strong month. So I have a lot more faith in buying around the end of July and getting a rally up into mid-August than I do buying right now. Because right now gold is swimming upstream.
And it sure is.
And these cycles that you're looking at, sine wave analysis assumes that a cycle is circular. The orbits of the planets are elliptical. That's the difference, and why I run two separate analyses. And if we look at the next page, now this is the gold monthly cycle.
Number seven, correct?
Yes.
Okay.
Monthly gold cycle. It's the same sine wave analysis. It's run through a buy and sell signal test. That's the cycle that has been most valuable over the last year. And it shows a bottom here and a bottom on July 29th. And again, I have more faith in that one on July 29th. Why? Because August and September follow, and they're seasonally the best months. So you not only have the calendar, the histogram that you see is what I call a static cycle. It's static in the sense that it hardly changes. I mean, maybe you have to go 20 years from now that histogram will alter somewhat. So that's run separately. Then I run the circular, the sine wave cycles, which assume that all cycles are circular, which they're not, which is what you're looking at, and you run it daily, weekly, and monthly. And then the planets, they're added in later on. And if all 3 point up or all 3 point down, you have a very good chance of a good move in that direction. And needless to say, the universe is not that accommodating, and they don't always do that every day. So therefore, you're left sometimes with half the cycles pointing up and half the cycles pointing down. And let me go to the next page. Now, how do you determine that with technical measures? Well, if you go to page 8, this is a very good indicator. It is a sentiment indicator. It is the GLD exchange traded ETF divided by the UGL exchange UGL ETF. The first one is 1 times long gold. The second one is 2 times long. So if you want to buy gold and you're cautious, you'll buy the GLD, you won't buy the UGL. So look at the last peak in December. That was at the last price low. And if you go back earlier and you run this graph backwards, you'll see that the last peak was also at the last gold price low. In other words, when investors are most cautious and they're buying the 1-time ETF versus the 2 times PDF, that's when it usually bottoms. And when this ratio gets very low, it means they're too aggressive. They're buying gold, but they're buying the 2 times ETF. What does that mean? That means they're very, very optimistic. And you'll notice it is not up to a peak yet. So therefore, this is not yet at a level which would trigger a buy signal, technically to me, but I think it may be there by late July.
Joe, the next slide that we're looking at this month, slide number 9, I have a question. You have gold 1969. What 19? We didn't start trading gold till 72.
Yeah, these are prices. These are spot prices.
Oh, okay. Sorry.
They start earlier. And actually, I mislabeled that previous graph. That was the weekly one that we looked at, and I mislabeled it as the monthly one. This is the monthly graph. And no, this is the same graph, but it is you have an expanded view. And you see those two little bumps there, July and August. Look what they're followed by. So this is telling me we have potentially one good trade coming up here from late July, somewhere into August, into the second or third week, and then it's down again. Now here we have a bit of a conundrum here in that, or a problem, in that September is the single strongest month in terms of static cycles, but the dynamic cycle is pointing straight down. In such instances, this cycle usually wins out. So according to this cycle, October, the Q4 should be very good for gold. And if I can just make one other comment that's got very broad implications, my old friend Tony Plummer from London, a noted technical analyst with 2 or 3 books to his credit.
We got to
pick it up on the other side.
He's the Elliott Wave guy of London, right?
Sure. Yeah.
Okay, Bill Meridian will be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back with Bill Meridian of Cycles Research. Bill, we're talking about oil, and I have a question from one of our listeners. This OPEC meeting that they had there in Vienna this past week, was there anything really dramatic coming out of that, in your opinion?
No.
Okay, that's good enough.
Well, let me. I hadn't finished with gold, and then I can better answer the question about oil.
Let's go right back to the gold.
Yeah, it was Tony Plummer that pointed out. He likes to make the point that a 38.2% retracement of an uptrend is very important. That if a price exceeds that type of retracement, it suggests that there's an underlying shift in the fundamentals that are driving price in that direction. And so it's probably going to lead to a bigger correction. And he likes to point out that if you take the bottom in gold when they confiscate gold way back in the 30s and raise the price of it from $20 an ounce, the official price, if you take that up till September 2011, gold has now retraced more than 38.2% of that entire move. And he said that suggests that this Keynesian policy of pushing more liquidity into the system and then getting more economic growth is ceased to function. And that particular belief system is part of a liberal, progressive, you could even call it radical leftist ideology that we then saw. After that occurred, we then saw Brexit, we then saw the election of Trump, and now we're getting attacks on people who don't agree. You saw what happened over the weekend with Trump officials trying to go to the theater or eating out in restaurants. That ties right into this eclipse that's occurring in July, which is opposite Pluto and on the Mars-Saturn midpoint. And the way I interpreted it was Pluto always has to do with shifts in power. And Mars-Saturn essentially says, we're going to force you into this position. You're going to be forced into adopting our viewpoint. Otherwise, we're going to go after you. So I would not be surprised to see, I fully expect that to get, that there to be more violence connected around that eclipse. So this entire, I look at it as one whole, to borrow a Fritz and Laura Pearl's word, gestalt. And that is now falling apart, that people are waking up and realizing that they're pushing too far away from reality in this world of leftism, and they're starting to shift back onto the right course. So now we can go on to oil.
Oh, this is the first question was already answered, so go right ahead, my friend.
So this is the oil weekly cycle, which is choppy to the downside until about July 8th. But if we jump to the oil monthly cycle, it still points up, and it points up until the first week of September. Wow. And you'll notice it is troughing here around the first week in July. So it's good we're talking now, because the one cycle is bottoming this week, the other one is bottoming next week. So this, I don't think oil has topped out. There are a couple of reasons. One of the big reasons for this that I always made with the Arabs, which I think they understand it now, but this is starting in 1990, is that commodity prices, according to the work of Dr. Julian Simon, always have a long-term tendency to decline because bright entrepreneurs come along and they figure out ways to make it cheaper and cheaper, such as shale oil.
Mm-hmm.
So why would it even go up? Well, because of the excess credit creation. And during the last administration, the Fed doubled the money supply. When has that happened before? It's never happened in U.S. history. And so there's plenty of liquidity going around chasing all sorts of products. So it is not that the price of oil is going up. It's the value of each Federal Reserve note is going down. Mm-hmm. And so if you had some way to factor out the inflation, that's the one driver. And the other one is, as you know, from that long-term BAI index graph that I sent to you and that I sent to subscribers, I had predicted a boom starting in the fourth quarter of last year, and so that increases the demand for oil. So it's inflation and real industrial growth. So that is what I think is happening with oil, and I confirm that with stocks like Anadarko, APC, which if you look at it, it looks like it's making a long-term recovery because those oil stocks have been trending down ever since the last oil high, and they were probably the only group that was oversold last December, November.
We have a question.
So are there
Bill,
any questions about oil?
Yeah. Yes, a question about oil. Do you think oil will get to $100 a barrel?
I think it may get up to around 90. I think you're going to get a more slow and a more slow, gradual rise because I don't think I have the histogram in here, but these months coming up, they're not the strongest months, but they're still up, and then September, October, the annual cycle punks out, as does this monthly cycle. So
we have a second question in this same series, and that is, what will be the effect of the Iranian sanctions on the oil? Will that affect the market for any period of time or no effect at all, or how does that work?
Well, it's hard to figure because how do you extract out what makes prices move? Unless you ask people who are buying and selling when they place their orders, they have to list the reasons why they're buying and selling. Mm-hmm. And so Iran off market is somewhat offset, I think, by Iraq coming on market and shale oil. But I think it's the demand. People always focus on the supply. I think it's inflation of the currency and demand because the economy is not slowing down. It's picking up.
Mm-hmm. Okay, we'll move on to the bonds now.
Yeah, well, the bond cycle points up, and we just went through one of the most dramatic sell-offs since the 10-year note started trading in '82. If you look at the numbers, if you even look at the breadth of the bonds, which I don't have up here, the sell-off was just really extreme. And so this bounce back, as you might recall, I had looked for a bounce back starting in sometime in June because the last week in June is the annual low in any year since 1983. And so you always look for higher. July and August are usually very strong. And in the week prior to that low, it's like the 20th through the 27th of June, that is one of the weakest periods. Would you believe that period has only been up 5 times since 1982? And so I wrote a piece for Forbes. I bought an inverse fund. I wound up selling the inverse fund about where I bought it, of loss of a couple $100. Because it just went sideways. So if it went sideways during a week when it's traditionally down, what does that tell you about the subsequent period? It's probably going to be up. And it did actually decline. Friday to Friday, it actually declined, but only by cents. I mean, it was not at all the usual week end of June period. So here you see the gold downtrend being penetrated to the upside. I mean, the bond downtrend being penetrated to the upside. If we go to the next slide, that's notes in the second, that is the month of June only, and percentage change. And you see that steep decline there? Well, it didn't really occur. Mm-hmm. Sort of the 20th through the 27th or the 17th through the 23rd, no matter how you want to look at it. So let's go now to the weekly note cycle. And the weekly note cycle shows a low around July 10th. It's currently, there is a sell signal here from July 1st through the 10th for 9 days, but after that it's up. But now let's go to the monthly cycle.
Well, we got a break. Could you stay with us and we'll finish this when we come back?
Yeah, sure. Yeah,
You bet. Bill Meridian of Cycles Research, Vienna, Austria. We'll be right back, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Bill Meridian. And Bill, I believe we are page 15, correct?
Page 15. That
Yes,
is
good.
the monthly note cycle, and notice that notes bottomed about a week or 2 weeks before the cycle bottom, but it heads up into the first week in August. And if we shift down to number 16, this is the histogram of notes for the year, and notice that July and August tend to be two of the stronger months. So I feel, having survived that last week in June, which is normally very bearish, with the monthly cycle pointed up, the histogram points up, that's the annual cycle. And if we go, well, this was would have been more accurate last week, but it showed that, here's where you get the technical confirmation. On page 17, you see that notes hit that 118 support. If I hit a daily chart, you'll see it hit that 118 support intraday and popped right up. And so that was the indication that the cycles are beginning to take effect.
Wow. Let's talk a little bit about your new book, okay?
Oh, that's the next slide. Yeah.
Yeah. Let's do that because it's worth the price of admission on this one, my friend.
I got into this because I'm sure you went through the same thing, Larry, but I remember being a junior analyst at Value Line in New York, and they said, well, welcome, gentlemen, you're paid to make an educated guess. And I said, well, yeah, and I said, well, that's opinions on stocks. I mean, that's what it is. It's an educated guess. And I wasn't really satisfied with that answer, so I started getting into forecasting and cycles and things like that. And then there's the question of, Dr. Mark Faber was my boss, Ali's favorite, one of his favorite strategists, and he used to come down and give us, I think this is happening in China and that's happening, and it's helpful if you travel there, like and Southeast Asia, you speak the language. I know people like that, they get on the ground, but I just became interested in the politics surrounding politics and economics, and that's what the book's about.
Hey, thanks, Bill, for being on. I really appreciate your help, buddy, and may God bless.
Okay, thank you, Larry. Bye-bye.
You bet. Thank you, buddy. Bye-bye.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!